So you call yourself a tech-first platform.
Seeing a 10-year bull run for real estate overall.
Even I've been hearing the rents are quite high in the tier 2.
Point is that every company comes with a 5-year, 10-year minimum investment time frame. Lucknow has killed it.
How does the whole legal structure and framework work?
So nobody understands commercial
Yeah.
in a large way, called special purpose vehicle
Okay.
or SPVs.
So how do AIFs work?
We somehow have been tagged in the market as bargain hunters. What investors get in our structure is,
So are you regulated by SEBI or RERA or both?
to get a 2-3 million office complex like this, it's not a joke.
Vacancy rates in Bangalore office, right, is 14% as of 2022.
Recession is good for India.
We've almost sort of developed the FPO ecosystem. So I wanted to jump right into it and ask you some fundamental questions about how fractional ownership works.
Person who says, I want to buy UBCD, you can directly trade on the stock exchange.
What do you do when a tenant doesn't pay you rent? Hi Sudarshan, welcome to Property Angel podcast about fractional property ownership. So you and I go back over a decade.
Yep.
We met last at the Power of Ideas contest at IM Ahmedabad, and we were both working on different things across different industries. And here we are a decade later, both working in real estate in non-PropTech solutions. And you've done an amazing job with Strata, right? You've almost sort of developed the FPO ecosystem. So I wanted to jump right into it and ask you some fundamental questions about how fractional ownership works. So when we buy an individual property, you get a registered sale deed, you get certain documents that prove your ownership. How does it work? How does the whole legal structure and framework work when we are investing in a unit with in a fractional property?
Got it. First, thank you, Sapna, for having. It's fun after several years we're doing this together again. But yeah, so from a structure standpoint, the approach is very simple. That today, if you have to buy a 50 crore trade, you have to put 50 crores and you have to buy a property as such. The way we do it is we float a company which
Okay.
is going to own the property, which is the company structure, or in a more technical jargon, it's called special purpose vehicle
Okay.
or SPVs,
Yeah.
whose only purpose is to own this property and generate rents out of it and have no other business as such. So for every property we buy, we float a special purpose vehicle which goes and acquires this particular property and enjoys the rents and distributes the rents to the investors. Now, this structure which we follow is the institutional way of doing. So all the
Okay.
large funds
I see.
across India, all the large family offices, etc., always float special purpose vehicles to buy a particular property as such, right? Because it's dealings them from other trades, other exposures, other risks, etc., etc.
Okay.
So what investors get in our structure is they get equity shares of the company, and we issue
Okay.
something called as CCDs, which are compulsory convertible debentures.
Okay.
The reason we do that is so that whatever rent comes at the company level, we issue interest to the debentures and we pass the entire money out so that the company level there's no tax leakage. And whatever
Okay.
comes as rent distributes to the investors on a month-on-month basis. So
Okay.
that is the structure we follow for the CCD approach.
Okay. So all other FPO platforms also work in a similar way, or do they have different structures?
No, that's probably the only way you could do
Yeah,
it.
there's
There
another
is
way.
also an LLP structure which people
Okay.
follow,
Okay.
just not widely used. I think only 2-3 transactions or 3-4 transactions at max would have happened through the LLP structure.
Okay.
But the private limited structure is more cleaner, more transparent, uh, less hassle as such.
Okay.
And there are multiple other legal reasons why a private limited is preferred over a LLP, but doesn't stop that LLP is not a structure you could adapt. So
Okay.
these are the two structures what people do,
I
but
see.
90-95% of the industry uses
Yeah.
the private limited structure.
I see. I see. So in terms of control, so who would be the directors on the board of, the SPV, and who would like when I buy a property, right? I control who the tenant is. I control when they start, the escalation, the rent. So what control do individual investors have when working on this?
So we buy pre-leased assets,
Okay.
which means the tenant has already moved in into the property or is about to move in
Okay.
into the property. So the lease negotiation, etc., is done.
Okay.
I'm an asset manager. I'm not the or a facilitator, if you have to put it up. My job is to identify property and offer it to investors for them to buy it, and then I continue managing the property on their behalf. In India, what we've realized that asset management is a very, very large problem. Many people have bought 10 apartment, 20 apartments, 50
Yeah.
apartments here and
Yeah.
there. I know of one of these very large CEOs based out of Bangalore. I think I'm sure he makes $1 million a year in terms of salary because it's one of the largest IT companies. but he spends his Sunday going after seeing his apartments and collecting rents or handling association meetings or handling that the tenants predominantly are bachelors or whatever who create some ruckus because of which the associations call them upon that throw them out or all these smaller
Yeah.
teething issues
You
or
should tell him about us. So,
of course. Or
so
about
yeah,
them I talking to brokers, meeting new
yeah,
landlords, doing the verification. I'm sure
yeah,
there's these viral things of
yeah,
give me a mark statement, I'll want to see
yeah,
that, etc., which is going in Bangalore. But
yeah.
having said that, these are those other parameters which is critical. So for somebody who's earning that much money,
Hmm.
it's not worth the time and effort to spend a Saturday, Sunday
Yeah,
doing this, right? You'd rather
yeah,
spend that money with your kids or read a book or
absolutely.
do something
Yeah, yeah.
for self-learning, etc. But this is one of the core points which we do. So that's our job as asset managers to do it. So we take those controls in our hand
Okay,
that we can talk to the tenant on a regular basis. If there's a COVID happening, should we give some rent discount? Should we defer the escalation?
okay,
Or if the
okay.
tenant leaves, identifying a new tenant,
Yeah,
what will be the terms of that? These are certain rights we keep as asset managers.
okay.
Otherwise, getting control, getting approval from so many people
Yeah,
becomes a challenge.
yeah.
But otherwise, with respect to sale, with respect to anything else, they have the whole control. Just the tenant part of the business is something which we manage on their behalf.
Okay. And so, in terms of sale, you said, in terms of exits, right? What about the control there? So, when you buy an asset, you would have a predetermined exit time frame that, yes, we will sell it at this point in time. Is that how it works?
No, not really. So we'll allow the investors to decide what they want to do with the transaction. It's your property at the end of the day. I'm
Okay.
just a facilitator, and like I said, I'm an asset manager.
Hmm.
So you decide when you want to exit. You say, yeah, go out of the market and sell it after 2 years, 3 years. It's okay. Sometimes we get approached by a lot of guys who are keen to buy properties. And particularly like many of our investors only are like, hey, I'm ready to buy this whole property. If you could take this to rest of them, I would like to buy it. This has happened
Okay.
in one of our transactions where
Okay.
our existing investor only said, I'm ready to pay premium, but I want to buy it. We
Okay.
exited and we made a good return for our investors. But typically, the investors have to the majority of the investors, which is three-fourth of the investors, have to give consent that I'm willing to sell at this price to this person. Then we go out in the market and sell. So for the first 3 years, we don't take any efforts typically
Yeah.
to go out and take any exits because it
Okay.
defeats the purpose of why you invested.
Yeah.
Real
Three
estate
years is a short time.
is
Yeah.
a 5-10 year minimum
Yeah.
investment time frame.
Yeah.
But 3 years we don't. Post 3 years every year we call upon
Okay.
in our annual AGM that you want us to start selling the property on your behalf.
Okay. Okay.
We determine a value that hey, this is the market value if we can estimate.
Okay.
If majority say yes, go out in the market and start selling, then we go out in the market and if we get the value at that range, then we come back, take approval again, and then we exit the property.
So you just take a majority opinion that you want to sell and then you start
Yes.
looking out. And let's say that some people want to sell and some people don't, then how does it work? If
So
there is
it's
some.
three-fourth majority, right? So if
Okay.
75% give you go ahead, even if you're part
Yeah.
of that 25 who does not want to sell, you have
Yeah.
to sell.
And if somebody wants to sell before that period of time, let's say the majority says, I don't want to sell, but some people want to exit, is there an
So we
option
have a
for them?
resale platform where
Okay.
investors are very can facilitate exits as such.
Okay. Okay.
This see end of the day, real estate is not a liquid investment. It's not fixed deposit that hey, I want
Yeah.
money and you get your money tomorrow.
Yeah. Yeah.
Typically, to find a buyer can take anywhere between 3 to 6 months before you could do it. So we put it on our platform. We have a resale window.
Okay.
Any buyers who come, we do it. So before that, we have a wait list as well. So many times, what happens is there are many investors who probably discovered our platform today, but says, "Yeah, I want to invest in a property where, let's say, Amazon is a tenant." Right.
Okay.
So if you own
Yeah.
a property with Amazon, you're like, okay, I'll join the wait list. If anybody exits, I'll want to pick that up.
Okay.
Right. So we have that
Interesting.
very large waitlist category as well of people who would
Okay.
want to participate. So
Okay.
we offer it to them if they would like to participate. But we've seen most of the times existing investors are happy to pick up more stock of the same property
Okay.
because they know
Okay.
it, they know the tenant is how, they
Yeah.
know about the property. So instead of putting in something new, why don't I take
Yeah.
more exposure in this particular property? These are also situations we've seen. In fact,
Okay.
6 out of 10 times has been the situation where
Okay.
existing only have bought more in the same
I
property.
see. I see. So what about the number of transactions in resale? Is that significant or not so much at this
Very
point in
less. So
time?
we've
Very less.
transacted on our platform close to about 1500 crores right now.
Okay.
Our resales would have been close to about 26, 27 crores.
Okay.
So less than 2%.
Okay. Less
Because
than
all of them
2%.
are mature investors who
Yeah.
come with a five,
Yeah.
10 year mindset. But
Yeah.
you need to understand 2% of your folks might need some immediate liquidity sometime because of which they've decided to sell or
Yeah.
they have certain other financial goals because of which they are wanting some liquidity out of
Yeah.
it
Yeah.
and they
Yeah.
want to take an exit. But in true sense, uh, taking a exit in between might never get the real value of the property what it could when everybody exits together. Example being, let's say when I want to sell a 50 crore trade to Sapna,
Yeah.
her intent of deploying 50 crores is capital preservation and then wealth creation.
Yeah.
Correct? First is okay, 50 crores parked in a safe property,
Yeah.
then comes the return. So mindset first is capital preservation, then comes the wealth creation. But if the same Sapna is putting 25-50 lakhs, her first priority is wealth creation, then capital preservation because she has so much other money which she can preserve somewhere. Correct? So somebody who is buying a smaller unit would look at a bargain value and say, I want a good deal. But somebody who's buying a large property, his first category would be, I want to safeguard my capital, which I want. And hence that's the criteria. So you'll always get a far more premium to some person who's after capital preservation rather than wealth creation. He's here to save his capital and he's not a bargain hunter, not an opportunist over there.
Okay.
So hence to get the real value of the transaction, like we've had transactions which we exited, we had targeted about 12% and we exited at 15.5% as IRR.
Okay.
We had one resale unfortunately in that and he sold it at 12%.
Okay.
Like he sold 6 months before we sold the
6 months.
property.
In 6 months, you had that
No,
difference.
as we kept the property for 1.5 years. He
Yeah.
had sold 6 months before we
Before
exited the
that,
whole
yeah.
property. So he could not generate. And we told him also that real value is only when you sell the whole deal and not a portion of the property as such. But you're like, I need the money, doesn't matter. I'll take a hit and want.
So talking about IRR, I was going through your platform and several others also, the FPOs, where they have a rental yield percentage and they have the IRR mentioned over there. So how do you estimate that? Based on what? Because if you don't have an exit timeline in mind, right? So then how would you work backwards and estimate?
See, there are two ways to look at it, right? Let's take as a financial investor and as a real estate investor. As a financial investor, IRR is your most important thing which you look at.
Yeah.
The way we look at it is what is my rental return?
Yeah.
What has been the property appreciation trend this micro market has seen in the last 5 years?
Okay.
In comparison with the city's micro market. Correct? Like certain micro markets obviously outgrow, like Outer Ring Road outgrow Electronic City, etc. Right? So we have to take a comparison of the whole city versus your micro market. And then take a median approach of that and we say that this is what we estimate seeing the past precedents over the years.
Okay.
This is the way you can continue growing as such. This is one way to look at because capital appreciation is not in my hands. I don't have predictability of that because the market determines. If I have invested, assuming 100 kilometers from Bangalore today, I will only make real sense if multiple other companies start also developing properties in and around that, then the market grows because demand supply comes in, right? So that is the most important criteria at the end of the day. So market dynamics is not in my hand. Or I'm building a property and metro gets announced outside my property, property appreciations will happen, etc. etc. So those criteria we estimate and we target that this will be and are rational around the same.
Okay.
We're very conservative with that approach. There are people who think that no, property appreciation will happen 10-15% year on year. We, even if we feel there are multiple properties we know will hit more than 10-15% also sometimes, we very conservatively always show 4 and 5% is the maximum you should expect and invest. So you know that I'll make only 13-14%. If it makes sense, invest. You may make 16-18, good for you, but is 13 a good number for you? Then participate, otherwise don't participate. So that's the approach we try to be very conservative from that standpoint and go with the approach. Because the approach is that we are not a sales company here, right? We are an advisory company. We feel is a good opportunity. You talk to your advisors, you talk to your consultants. You feel is a good deal for you is when you invest. So we are not here to come and sell, no, Sapna, you have to buy this. This is the best deal for you. We never do that, no matter what.
Okay, that's good. So in the IRR includes the rental yield or does that it includes?
So it's rent plus appreciation. So what we do is if you're making, let's say 9% rental return and a 5% appreciation, very conservatively, you will make 13 to 14%.
Got it.
9 plus 5, 14.
Got it. And this includes your or excludes your management fees?
So if you remove that, that's why I said 13 to 14, right? 14 you'll make, 13 is net you'll make post a 1% management fees we charge.
So management fee is 1%. What is your fee structure? How does the fee structure work?
So we charge a 1% management fee and we charge a performance fee of 20% over and above an IRR or a CAGR of 8%. So unless you've not made that much money, I'm not going to bill you anything at all. So the way we anticipate that If you are making a capital appreciation of 5% year on year, then anywhere between 0.5 to 0.6% of that, which is 10% of the appreciation, is the fees which I would charge
As a
to
performance.
get that. So overall, my management fee comes to anywhere between 1%, which is fixed,
Yeah,
to 1.6% as the overall return, subject to you making X amount of money
that is determined when they exit.
when exit. So this comes to
Okay.
the part of a real estate investor.
Yeah,
So if the real estate investor says, see, here's a lock-in with a tenant for 10 years.
yeah,
Why do
yeah,
you want to sell? I'm getting my principal back
yeah,
in 10 years because my rental returns are good.
yeah,
Let
yeah,
it be. How does it
yeah,
matter? So my
yeah,
performance fee will take a hit always on
yeah,
that. That's priority.
yeah,
But
yeah,
that's not our
yeah,
core goal, right? End of the day,
yeah.
our focus is that we need to do what our investors want. And if we staying put for 10 years, we know that we can demolish and do something bigger tomorrow. Like example, Pina today in Bangalore.
Hmm,
If I had leased a factory to Aditya Birla,
hmm,
which has multiple units in Pina,
hmm.
to start manufacturing their venues in suits.
Yeah,
10 years, assume 15 years over, Aditya Birla is still there.
huh,
Now, what has Pina changed? Pina today has high-end residential complexes coming.
yeah,
So my investors, that's why I brought this word called real estate investor.
yeah,
He'll say, let's just demolish and make a residential, or go talk to a Brigade or a Prestige or XYZ
hmm,
and do a JD with them. We'll make far better
hmm,
returns than the rental returns we are making out of the
yeah,
property.
yeah,
Right. So
yeah,
those are other parameters which we look at. The idea that how can we unlock more value for investors
hmm,
and go after chasing opportunities is what we regularly keep.
got it. And in terms of this fee structure, so most platforms have a similar fee structure where you just charge a management fee and a
So
performance
certain
fee.
platforms charge additional fees on top of that as well. In terms of managing of the SPVs, etc., they don't disclose upfront
Okay,
and they charge a hefty fee on top. So their effective management fee comes to 1.5% plus performance fee, etc.
okay,
So their fees and investors think everything is same.
yeah,
Thanks to
yeah,
SEBI now, then everything would be same. But
yeah,
until then, not every investor went into granular details and read through what are the costs they have to incur.
yeah, yeah.
But at least from our side, this is what we
So
charge.
when you acquire a property, you don't charge anything at the entry.
Very less. So the idea
Okay,
is that whatever fee we incur is ideally just meeting the cost of our acquisition, which is,
okay,
let's say, I have to pay a brokerage to a broker, or any other miscellaneous
yeah,
costs which are
yeah,
incurred in the
yeah,
transaction. That's
yeah,
what it is. So very
okay,
marginal. Like we charge a 3% acquisition fee. Usually we pay the broker 1 to 2% for getting us the deal,
okay,
and 1% we keep it towards distribution, legal costs, etc., etc. So net,
okay.
there's not a sizable, and these one-time fee doesn't make sense. We are in the management fee business.
Yeah,
So
true.
getting that 1% every year is more critical for us than anything else.
Yeah, yeah, yeah. So, in terms of the assets that you invest into, and just to get an understanding of the types of commercial assets that are there out there and that are accessible to investors, can you just compare what the different types of commercial assets are, what you're interested in, what you're excited about, what you're trying to stay away from?
Got it. So office is probably the most low-hanging fruit. Everybody
Yeah,
has made an investment,
yeah,
etc. So we
mm,
do office.
yeah.
It's almost 50% of our portfolio,
Okay,
a little more than that. We invest in warehousing and industrial facilities as well.
okay,
So we build factories or we buy factories. We build warehouses or
okay,
we buy warehouses as well, lease to
okay,
large clients. This is
okay,
another piece which we do very extensively. Retail is something we haven't done much in a large ways because retail returns unfortunately haven't been very attractive. Let's say you go to Mumbai and say,
huh,
okay, here's a bank lease to HSBC as a bank branch to buy for
okay,
40 crores. People ask like 5% returns, in terms of the yield at which you could
yeah,
buy the deal, right?
okay,
Because it's marquee, banks don't
yeah,
leave, etc. But
true.
the way we look at it, that if Sapna is investing, this might be her only investment she might make with us because it might be probably her life savings.
Hmm, hmm.
Is 5% good enough for her because she could keep that money in FD
Yeah,
and make 7-8%, right?
yeah, yeah.
So we don't go after those kind of
Okay,
trades as
okay,
such, right? So retail,
okay,
that's been the challenge. We don't do
okay.
malls.
You don't do
We are
malls.
very clear we don't want to get into mall
Okay,
business.
okay,
Mall is not about real estate, it's about operating the mall. The
okay,
real true sense to generate the real return per square feet is how can you attract more footfalls to your mall and how can you drive. And I
okay,
think in India, there are two, three players who really know how to run a
okay,
mall.
okay.
Otherwise, the people, because their realization per square feet versus somebody else's
Yeah,
realization per square feet is like
I see.
is a
Interesting.
vast
Okay.
difference. So we don't do
Yeah,
malls because
yeah.
for that reason. Data centers, we're not there yet because it's a pretty big boy play.
Okay.
A typical data center transaction starts at 500,000 crores minimum.
Oh, really?
So it's not our
Okay.
game, unfortunately.
Okay. Not yet.
Not yet.
Yeah.
Maybe we'll soon be there.
Yeah.
Something which we've been dabbling for for about a year and a half in terms of our research and thesis, and we'll go aggressive from January onwards is
Yeah.
hospitals.
Hospitals, yeah?
So we are very gung-ho about this, and we feel in India there's a very large opportunity for us to get into hospital asset.
But doesn't that have the same challenge as retail or malls then?
No, not really. In fact, so let me ask you itself as a question, right? Which hospital in the last 20 years you've seen shutting down?
Yeah.
Simple, right? So what happens? The hospital real estate never shuts down. The operator can get acquired or can shut down. A new operator will come and take because the
Okay.
infrastructure has been made as
Hmm.
such.
Hmm.
So that has been the thing. Like in Chennai, in Adyar, there was a hospital called Malar Hospital,
Okay.
which was a very very large hospital. I think they went through some financial trouble. Wockhardt came over and took it, which is Fortis, and now they are having trouble, and MGM Healthcare has come in and taken that.
Okay.
So the real estate will never have an issue.
Okay.
Operators may change, but you'll always get tenants coming because it's a location play.
So hospitals pay a fixed rental.
Yes.
Okay.
And they stick around for 20, 30 years.
Okay.
Because
Okay.
I asked you 20 years, which
Yeah.
hospital have you heard? Like
Yeah.
Manipal on, your HAL road.
Yeah.
And
Yeah.
do you foresee them moving in the next 5, 10
Yeah.
years with the amount of
Yeah.
people who come and
Yeah.
flock? Apollo hospitals in Greaves Road
Yeah.
in Chennai.
True.
It's not, they're just expanding more and more. Any property they find in the close vicinity, they keep buying
Yeah.
because
Yeah.
they want to open more centers, right? So we are seeing that, and in India, with our thesis which we built, there's a acute shortage of beds.
Okay.
We are less than one bed per thousand, vis-a-vis China, which is at 6, 7, US, which is at 5.5, 6. So if you have to do, you have to build this infrastructure into 5, 6 times to meet the criteria as such. And I think Indians are understanding the importance of healthcare because all it takes is one disease which can wipe out your entire wealth you've created,
Yeah.
right?
Yeah.
Or a generation itself. It can take you at the back foot. So with insurance penetration getting deeper and deeper, we feel quality healthcare will be a top priority to people. And hence we are trying to go to hospitals and saying, why don't you be the operator and sell the real estate to me, or I can build more real estate for you. So you can focus on your core business. I can focus on my core business,
Okay.
and we build a partnership together and we build things together.
So today hospitals own their real estate or
Yes.
do most of them? Oh, yeah.
So interestingly, most of them own
Oh,
their hospitals
okay.
themselves. Yeah.
Okay.
Very, very interestingly.
Okay.
So
So they
very,
buy the
very.
land, they build it out, and they
So
run the
imagine the kind of
hospital.
money which goes in
Yeah.
then. So if you do a 250 bed hospital today, you take anywhere between 150 to 200 crores as your investment,
Hmm.
plus 100 crores in equipment.
Yeah.
Plus, you need to spend at least 1.5 years worth of working capital because no hospital takes off overnight. It
Yes.
takes
Yes.
gestation period. You need to
Yeah.
get doctors, etc., from other hospitals or
Yeah.
whatever
Yeah.
XYZ. So it takes you close to about 300 to 350 crores of an investment for a 250 bed hospital before it becomes a sustainable, self-sustaining
Yeah.
center as
Yeah.
such.
Yeah. Yeah.
Now, how many hospitals have that kind of money?
Yeah. True.
Correct. So we are trying to play, and now of late, a lot of private equity has started coming into the whole hospital businesses as such.
Okay.
So PE money realizes that this 350 crores is too expensive of my money to go in real estate.
Yeah.
Why don't we look at a structure where somebody else owns the hospital, and we only be operators whose core business is treating patients and not enjoying rental returns out of
Yeah.
the property.
Yeah. Yeah. So you would do like a build to suit for the hospital.
Build to suit, sale and lease back, whatever, both the options are available. The whole idea is we're saying that we'll be your partners for expansion,
Okay. Got it.
and we'll help you expand across India.
Across India. So talking about that, so this is what about the tier two? What's your take on the whole tier two story? Because that's another interesting space, right? I mean, the metros are quite saturated,
So we've
and
invested in tier two. We've
okay.
invested in Jaipur. While we still consider tier one in some sorts, but from a Bangalore standpoint, it is tier two. It is a very large opportunity, to be
Yeah.
very honest, to consider tier two markets. We're investing in Cochin now.
Okay.
We're building a warehouse over there. So tier two is definitely a market to explore. The reason we see a challenge is scale in tier two is not as much as I can get in a Bangalore. So if I can deploy 1,000 crores in Bangalore, tier two deployment of more than 100 crores itself is a big challenge.
Oh, yeah.
First, second challenge is not finding sophisticated developers in tier two who understand the importance of, partnering with an institutional because, tier two has a lot of cash transactions, unfortunately.
Yeah, yeah.
So it's impossible for them to accept that they have to pay so much tax itself.
Oh,
So,
okay.
we've lost a lot of transactions,
Oh,
unfortunately,
yeah.
because of that reason.
Okay.
They're like, oh no, so much taxes, we are not ready to pay so much taxes. So we can't pay over a premium at the end, right? So that is another challenge with tier two is scale. We
Okay.
also feel tier two, if I deploy 1,000 crores, who will buy my 1,000 crores when I want to exit also?
Acha, yeah.
So hence we are very opportunistic and only limiting a tier two investment not more than 100 crores
Okay.
per city. So I'll not do
Okay.
till I don't exit. And so if I do 100 crore, I would like to roll over my 100 crores and then probably do 150, 200. But I'll not do a 1,000 crore deployment in a tier two market no matter what.
And 100 crores across different
Cities, yeah.
assets.
Yeah, okay. Doesn't matter.
Doesn't matter. Mm-hmm.
Because I can find those buyers.
Yeah, yeah, yeah,
Exit becomes a large concern, right? If
yeah.
I imagine there's a transaction we got in Trivandrum for a 2 million square feet
Hmm.
office park.
Hmm.
And in Bangalore, we get at 8, 9% and rent, I was getting at
Yeah.
12%.
12%
Correct.
rental yield.
So my
Yeah.
question was, okay, very attractive, sounds good.
Yeah.
But who will buy me out when I want to
Buy
exit?
me out, I know. But even I've been hearing the rents are quite high in the tier twos, and there are developers who are taking interest and setting up office spaces.
Also,
So,
post the pandemic, tier two was taken because of the whole
yeah,
work from home culture,
exactly.
etc.
Exactly.
Multiple, like Lucknow has killed it. Kochi has seen the highest reverse migration of people
Hmm.
coming back to Kochi in India.
Okay.
So multiple such insights are there. See, the idea is also about you don't go by short-term trends. I have
Yeah.
to track and see, is this a permanent phenomenon or is this just a 1, 2 year
Yeah.
thing? Because we invest
Yeah.
for a 5, 10 year mindset, right? So I have
Yeah.
to go with
Yeah.
permanent phenomena and not
Yeah.
short-term trends.
Yeah. Yeah.
So hence, like for instance, if it's a warehousing trend, we'll take it
Yeah.
because consumerism in India is growing anyway.
Yeah.
So
Yeah.
tier two, unfortunately, does not have all the kind of showbiz like Bangalore, where they
Yeah.
can spend, let's say, in a trampoline park, in a go-karting, in
Yeah.
a movies, and spend 1,000 rupees, etc. So they make the money, but they don't have the ability to spend. So
Yeah.
consumerism is high. So they go to a mall, they'll
Yeah.
shop, they'll probably spend more than what person in a Bangalore would want to spend,
Yeah.
etc. On best clothes, etc.
Yeah.
These are great trends, and
Yeah.
these are trends to stay
Yeah.
because these are
Yeah.
trends which all these e-commerce companies have been tracking for the last 5, 10 years as well, right?
Yeah. Yeah.
So hence the warehousing makes sense because consumerism is growing,
Hmm.
right?
Hmm.
So stuff like that is okay.
Hmm.
An office bed is still a very, very large bet to take, to be very honest.
Okay. So, in terms of data, so I was just reading that the vacancy rates in Bangalore office, right, is 14% as of 2022. The previous year was 13%. So, even post-COVID, it doesn't seem the vacancy rates are not reducing.
So
So,
I beg to differ. So the real issue which is there is, let's say, Bangalore, in my view, is a single digit vacancy market tops
okay,
for grade A stock.
okay,
When you read reports, they talk about overall Bangalore,
okay,
which
okay,
has a lot of grade B buildings, grade C buildings as well, which are 20 years, 15 years old, standalone buildings, just a landlord who built it. The tenants are smart today.
okay.
They know their requirements. They know what kind of buildings they want. They know what kind of ceiling height
Yeah,
these guys
true.
require, what
Yeah,
kind of
yeah.
power load should be there, multiple things, right?
Hmm.
So those are criteria cause of which vacancy numbers look high because the stock is not matching the requirement of the thing. But when
Hmm.
you look at grade A stock,
Yeah,
it's single digit, which is
okay.
okay, right? Because sometimes a tenant wants a million square feet
Yeah,
office space, but available is 500, so there's a mismatch. So
yeah.
we'll say build to suit kar lete hain. We'll
Hmm.
see if a new building comes, then we'll do. So that mismatch happens sometimes.
Okay,
As such, hence that vacancy. So anything 5 to 8% is a very okay, which means the market is doing very well. Double digit are a matter of concern, right? But
okay,
it's only the grade B, grade C stock. You'll not find grade A stock available in Bangalore
okay.
today, except let's say your North Bangalore today, where people are ambitiously building
Yeah,
with the hope that the markets would take up.
yeah,
Uh, Everything would have been good if US does not go into recession
yeah,
as such.
yeah, okay.
Otherwise, there might be a 1, 2 year lull period
Yeah,
because recession is good for India.
yeah.
The more recession there, they'll outsource more jobs to
More
India,
jobs. Yeah,
etc. So we
yeah,
foresee a lot more
yeah,
benefit from that standpoint. But having said that, there would be that 1, 2 year hit for a short term and then back to the big real estate cycle which we foresee. So we are
yeah.
seeing a 10-year bull run for real estate overall.
Hmm.
Short term 1 year, because of global phenomena, there can be some lull periods or a downturn, but it'll bounce back again much faster than anticipated.
So the work from home, you think, has not affected the vacancy rates?
Absolutely not.
Not.
See, let's take as an example Cisco, for lack of a better word, right? So, lack of a better company. So, we like Cisco as an example. Today
Okay.
might have 30,000 employees in Bangalore.
Huh.
So, 30,000 employees, let's say 2.5, 2 million square feet of office space they've taken. Now, in Cisco's balance sheet, India balance sheet, rental is 1% in their expense sheet. 90% is still human capital, right?
Yeah.
95% is still human capital and all the other employee benefits which they have to provide. So if recession or cost cutting is a thing, first is when they'll fire people.
Yeah.
They'll not let go office space.
Yeah.
At all, because it's just meaningless for them. Because to get a 2-3 million office complex like this, it's not a joke in Outer Ring Road today, because there are 100 others who'll say, I'll take this property immediately, right? So point is that every company comes with a 5-year, 10-year minimum investment time frame if they're setting up a GCC or a GIC in India.
Okay.
So if for a COVID or a work from home, they'll still keep seeing a trend on a permanent scenario rather than a short-term scenario. Then they'll let go space. Otherwise, they'll not let go space.
So your tenant profile is mostly grade A, grade A tenants.
So we have grade A, which is 85%,
Okay.
85-90. We have startups as well as our tenants.
Okay.
And we have an SME as well, who's our tenant. But a SME for, I think, a 60-year-old SME.
Okay.
But still does a 500 crore mom and pop shop. Profitable for decades, etc. And is running the show as a large OEM to a large company as such. So we're okay taking such calls also. But predominantly is Fortune 500 kind of tenants who are there as part of portfolio. And this is very important for us to do it. But a startup, which we have, like I said, very well funded, profitable for the last 3 years.
Who
So
is
that's
that?
that's a very interesting thing that we can, we are ready to take a call, because see, end of the day, we still own the real estate. My principal is not going anywhere. So if the tenant goes, I can find another tenant. It doesn't make a difference to me, right? But it's about taking a call and have conviction and move forward.
Do you have co-working players also as your tenants?
Unfortunately, none yet as of today. We are not excited about co-working. We are okay about managed office operators who we can work with, because end of the day, they have predictable revenues coming from their tenants who they have back-to-back lock-ins with. So we work with them more than a co-working player. So we'll never work with a co-working. It's a negative area for us. But we're okay working with a managed operator, because they are managing that property on behalf of another client who also has a similar lock-in executed in that particular property.
Okay, I see. So I'll ask you this question, which we get asked a lot, like what do you do when a tenant doesn't pay you rent, right? And for us, it's okay. We have a team set up and we have individual people paying us rent. But for you, it's like large companies. So what do you do?
So large companies, more accountability, more corporate governance. So I don't have to worry. I don't have to go sit in their office.
You don't have that issue at all?
I don't have that issue. Delays happen. Every company has its own some cash flows issues sometimes here and there. There are clients who pay us 15 days late, 10 days late. I mean, big names, but unfortunately have poor finance structures in which, approval nahi aaya mujhe, or my CFO changed, the new CFO is not there, so who's going to authorize? These issues, to be very honest, it's shocking when you hear a company who does 5-10,000 crore turnovers are talking about all this. But these are smaller issues, but we've never had rental defaults in general from that side.
No litigation cases or anything like that?
So litigation as such today is not there, but that doesn't mean I'll never have. In India, anybody can do anything they want on anything as such. So you can't really say, but there's always a possibility as such. So we filed one, like there was a transaction we were supposed to do, and the seller backed out. Again, a very large corporate. In fact, we're buying from a corporate. It's the largest conglomerate of India too. So it was very shocking that they would do something like that. So our investors invested, and on the date of registration, they said, we don't want to sell it to you. So, because our board now decided not to sell the property. We're like, hey, you signed documents. Here's the money. We are supposed to register today. You can't go back on the registration day. I'm not doing. So we said that, okay, you pay us the interest loss, what my investors are going to incur, and done, but they're not willing to pay that. So we said, okay, we'll send at least a legal notice and see if we could recover the money. So that's That's what we do. But we don't want to go to court for such silly things at least.
So we were talking about regulation, right? And so are you regulated by SEBI or RERA or both?
So as of today, no formal clarity who's regulating us as such. So Companies Act, we follow Companies Act because then SPV which owns the property, and we follow all the rules around Companies Act, which is clear. We are RERA registered brokers. We felt that's the closest I could take, because even if you run an online platform, RERA says you need to register as a broker with me. Correct. So we have, and where all we have our businesses and offices, we have RERA licenses of all those respective states. And if I do a business in Jaipur, example, I don't have an office in Jaipur, Rajasthan. I have applied for a RERA of Rajasthan. So where all we do business or where all I have offices, we have those respective RERAs with us, because that was the only closest possibility which we could see for ourselves. So we have that. Now with respect to SEBI, been working with them for some time, and they've been very kind and more than anything, I'd say very progressive. Where they've come forward, heard us, what are we thinking, what do we anticipate regulations would allow us to do, what we should not do, etc. They've been very, very kind, to be very honest, and formal regulations are coming out next week or next to next week around how the business should be operated with the new framework which they've created for ourselves.
So what is this framework? Can you tell us a little bit about how the regulation would work?
So it'll be, today what we have is an SPV structure. We'll continue doing the same SPV structure, nothing. Just that instead of the CCD and equity which we were providing, investors will now get the same CCD equity in demat form. So, and all these properties would be listed on the stock exchange. So if you want to sell, let's say we bought UBCT via the platform, you saying I want to exit UBCT, and here's another person who says I want to buy UBCT, you can directly trade on the stock exchange. You don't have to come to me. Like a REIT. So it's called MSM REIT.
MSM REIT.
You could exit and do everything on that REIT. Second advantage investors get is, today when it's unlisted, taxes are 20% long-term capital. Once it gets listed, taxes are 10% long-term capital. So there's a tax saving angle also with this approach. Number two, but one of the core principles that which we feel is one of the best is, now there is a governing body who investors, if they have grievances, can go and raise complaints, and then they can work with the REIT operator and say, hey, what is wrong with you guys, and you have to solve. There are these grievance redressal mechanisms, etc., which are going to be enforced, which would be very helpful for investor protective standpoint, which today does not exist. Right. So that is the most important part of the SEBI.
But any restrictions, any things you cannot do that you were doing earlier?
Yeah. So we can't do under construction.
You can't do under construction.
We can't do under construction. So if I have to do a build to suit, I'm not allowed. But what SEBI, at least we hear, is SEBI saying we could, it could be option for you to take certain assets which you want to take to the REIT. Certain assets you can do on your platform as well, which is not regulated. Correct. Probably find another regulation under the SEBI umbrella and continue operating the trade. We lack clarity, to be honest, because we haven't got the finer prints. But if you have to REIT out, you have to follow these rules. No under construction. I have to put money on the table. I can't exit for X number of years. I should have this amount of net worth, as a sponsorer, etc. But for those transactions where I do opt out to not take that asset on the REIT, I'm allowed to do that. But those assets does not have to follow the framework what has been provided. You can create your own framework and operate the vehicle. So it's like embassy today can REIT out whatever they want to REIT out, but can retain whatever they want to retain also. So they can have Sapna investing in a property directly as well.
I see.
SEBI does not stop that. So that is the approach they've taken for the MSM REIT as well. So you can choose the properties you want to REIT out, and you can opt out from the trades you don't. And the minimum is 50 crore. Per property.
Each
minimum
asset
you have to buy is 50 crores. So if I have to buy a 25 crore deal, I have no option but to not take it to the REIT platform. As such, right? If there are a lot of platforms who do holiday homes, etc. Holiday home is 3-4 crores.
Exactly.
How do you do? So those you continue operating with your current structure, no harm. But
so what would be the pros and cons of going to the REIT or staying on the platform for you?
For us, absolutely nothing. Just that
Nothing.
investor redressal is better for an investor in
The
the
confidence will be higher
SEBI
if it's a
regulated
REIT.
versus an unregulated
Yeah, yeah,
environment, especially when regulation is there. When
yeah,
regulation was there, it's fine.
yeah,
But once there is a regulation, then this is there. So on a long term, everything has to be in the REIT platform.
yeah,
But if you
yeah,
have to do build to suit, etc., because we have those investors who are saying,
yeah.
I'm ready to take that risk because I know I'll make extra returns out of it. And, maybe I get a Kotak back or an HDFC to finance, take some debt, LRD, and then take it to the REIT platform once the
Yeah,
asset is completed.
yeah, yeah.
There are transactions which are empty. Building
Okay,
is empty. So
okay,
I can't take a untenanted property to the REIT.
okay,
Not allowed.
okay.
But the property is empty. Invest like, oh, yeah, we are getting at a cheaper price. Let's buy it.
Yeah,
We lease out and then, we can take it to the REIT platform, etc. Those are transactions which we'll have to do off REIT or via my regular platform at the end of the day. So
okay,
that will be, again, let the final prints come. We'll have full clarity around it. But what we know is you can opt in into deals which has to be REITed out. You can
okay.
opt out of deals which you don't want to REIT it out.
Don't want to read out. So then, what from an investor perspective, what would be the difference between investing in like an embassy REIT or one of your REITs? Would there be
So,
any difference in the
of course,
MSME REIT or
absolutely in a
the?
large way, right? So here in an embassy REIT, it's like a mutual fund.
Hmm.
You have number of properties, you have a hotel, you have a solar,
Yeah.
multiple things. Here it's you knowing the property, you knowing the tenant, you knowing the escalation. So it's more direct, you know each and everything about the property when you're investing in me. So if I have to put it up that way, it's like you buying an HDFC stock versus buying an HDFC mutual fund.
Okay. Okay.
So mutual fund might have everything in the universe.
Yeah.
Here it's about you directly buying the HDFC stock that I know the returns what the HDFC stock would make for me.
But you can also combine your assets and put them into a REIT, or you can't do that with the MSME REIT.
Can do that as well.
You
So
can do that.
combine 5, 6 assets together and
Yeah.
rate it out. That's
Yeah.
also a possibility.
Okay. Okay.
But per asset has to be 50 crore.
50 crores. Yeah. Yeah. Yeah.
Again, like I said, these are things we are hearing. This is the consultation paper we received. Once we get the final copy is when we'll know exactly what we're supposed to do, what we're not supposed to do under the REIT framework. What we are not supposed to do in the REIT work, we'll see if we can continue doing the platform. Because, see, one of the core things which we are doing, right, and why SEBI has very proactively seen, us as platforms put together in the entire industry today, we are, let's say, owning 40-50% market share, but there's 50% still owned by multiple other players together, is 40% of the overall REIT money which retail has invested. So if overall REIT investment today in India is, let's say, 1 lakh crores,
Okay.
retail participation is about 8-10,000 crores tops.
Okay. Okay.
And if I'm already as an industry together, we are at 3.5-4,000 crores. We are already 50% of the overall REIT public market.
Okay.
Hence, they feel that this has merit.
Yeah.
And this requires things. Number one. Number two, today what an embassy REIT is, Brookfield REITs are, these are these Manyata Tech Park kind of 5-10,000 crore kind of assets which are there. But what about in Koramangala if there's a 100 crore property? I want to buy, I don't have the ability to buy. And the seller wants to sell, he does not have investors who put 100 crore checks. So that gap is a very large gap which we're in. So hence the medium and small REITs where assets from 50 to 500 crore is the territory we fall under. Above 500 is the territory the large REITs fall under. Right? So the mid category is a very large category. In India, it is upwards of a 3 to 4 lakh crore market of assets in this segment. Let's say a large REIT today will not take a property where there are two owners. They'll say, I'll only take if I own the whole building or I'll not buy.
Okay.
But what about those where the developer wants to sell certain things or the landlord has done a JDA or is developing, he wants to de-risk his debt and wants to sell out certain things? Those are not REITing out today.
Okay.
So those are transactions which we can work together, which also has merit value, which also has sizable consideration value, and do such kind of transactions to ensure those asset classes are also available for investors to buy.
Okay. Okay.
So that's a large segment which we are catering to.
In terms of the overall real estate investment, Indian investment in real estate, what percentage is in commercial and all these alternate investments? Do you have any idea?
Any data point is not accurate, to be very honest. Several
Okay.
reports talk XYZ things,
Yeah.
but in general, an Indian's net worth average is 70 to 80% real estate.
Yeah, exactly.
Correct. I'm sure your clients also have that same thing.
Yeah.
But the growing trend is a lot of money is moving into the financial markets.
Hmm.
So as a realtor, in this market. I think we are also sitting on the barren to ensure that some money comes back to the real estate side and not move to the financial by financializing this product and making it a financial product, right? Backed by real estate as such. So I'm saying uh, there is merit in this play, what you're trying to do, but in terms of getting a full clarity, what is alternative, this, that, etc. Every company puts its own reports of what they anticipate as such, but clarity wise, very difficult. So a normal investor who's making up to, let's say, a 5 crore yearly income, his commercial real estate exposure would be close to 5% overall. Max. His residential would still be 70-80%.
70-80%.
Overall, I'm just saying
Of his
overall put
overall
together, right?
net worth.
Because somebody who's making 50-60 lakhs, he can never buy a commercial property in his life, right? But somebody 5 crores probably has one. So I'm just saying overall, the universe of investors who make 25 lakhs to 5 crores might maximum have an allocation of 5% to commercial. Residential would still be a very large portion. And alternative like AIFs, etc., would be the other piece. So, but that's the play we are trying to see if we could make that as a large thing that tomorrow some investor should always have, let's say, Strata as part of their portfolio. So that's one of the crazy moonshot ideas which you have, that people should, as part of their portfolio allocation they do, keep commercial real estate as part of the thing, and via Strata as one of
Via
the.
Strata. So how do AIFs work, and how is that different from how FPOs work?
So AIF is a blind pool. You have no idea where your money is going. The fund manager takes a call. Here, you are taking a call. So it's more about being informed about the transaction vis-a-vis a blind pool. In the years in the past, none of these funds have been a rent yielding fund. Most of the funds in India have been credit funds, where they used to fund or finance developers, used to make 80-90% returns. Few have done very well, few have failed royally, lost investors' capital, and that's part of business, right? But nobody has been a rent yielding fund in general. And most of the Indian players who are in the AIF circuit, not many, in my view, 1 out of 10 have commercial real estate exposure. Rest are all residential. As such, right? So nobody understands commercial in a large way. Or even if they understand, they only understand the finance part of the commercial rather than leasing, asset management. How do you do it? And if you see very smartly, these American funds and Canadian funds, Singapore funds who have owned probably half of the India commercial area, they know the trade very well. They don't put money in residential at all. They put money only in commercial, and they've done so very well for themselves. So that's what we are trying to do as such, that push that mindset and say, why don't you build a rental income portfolio rather than just going in blind pool, and you decide which property you want to invest. So if you as a investor says, yeah, I don't want to invest in Hyderabad. Hyderabad is too much supply, less demand, I don't want to invest. But if you give me money in the IF, it's my decision. I say, no, Hyderabad is a good market, I'll invest. So, it's a recipe for disaster as an investor, but the fund manager does not think, basis his thesis. And hence he's deploying his capital, right? And if it fails, then you're like, oh, why did I put money, right? So it's more about being informed rather than, so it's, in a nutshell, it's more like a PMS versus direct stock investing.
Got it. And so you call yourself a tech first platform, right? So in terms of technology, like what pieces are covered under technology? What does the platform do?
So for us, anything we do which is not scalable using technology, we don't do it. Simple. So that's the core principle from our business standpoint. And we have great product heads and our head of engineering, whose approach has always been to productize everything which is manual. Because if everything is manual, you can't scale up. So for the longest, we've had a lot of investors who want to invest in dollar investments on our platform. We've not been taking it is because the whole approach is still manual and requires physical paperwork to be filled. Hence, it's not scalable. So everything we do on our platform is using technology which allows us to scale inherently, whether it's our property listing, whether it's our entire investor onboarding, them investing to them transferring money to everything is completely online. We don't accept checks also. It's only net banking or an online RTGS transfer which you do. To the entire process from the time they invest to exit, tracking everything is through the technology platform. We have an application through which you can do. We have WhatsApp support where you can ask queries, whatever you want, because many have queries
Yeah.
what is the taxation, how do I file my returns, multiple
Hmm.
things, right?
Hmm.
Because
Hmm.
there's a new investment for them.
Yeah. Yeah.
So those are all again through technology as such, because manually it's impossible for you to scale
Yeah.
and have. So we have currently 2,800, 900 investors who have deployed capital with us
Okay.
via platform with the close to 1,500 crores of AUM which we have today.
Okay.
So, if you still work on Excel sheet,
Hmm.
you really can't do
Yeah.
anything as such. So bunch
True.
of things we do.
Yeah.
Several are trade secrets which we do are
Okay.
all luckily thanks to the technology platform my team has been able to build, which
Okay.
I think is one of the biggest differentiators us versus the rest of the players.
Hmm.
With respect to our technology, I think we are way, way advanced versus anybody in the market today.
Okay.
Anybody in the market, like by a far distance
Yeah.
right now. Yeah.
Okay. Okay. So you've raised a lot of funding as well, right? From some pretty well-known names. And so are you still looking at raising further rounds, or are you quite sustainable right now? What is the plan going
See,
forward?
so always our intent has been to run a profitable business. So we are about to hit break even
Okay.
as a business standpoint, despite us investing heavily in technology, which obviously comes at a
Yeah.
cost
Yeah.
as such. But having said that, we are at that stage where we will break even soon.
Okay.
But if you want to continue growing, especially with the new SEBI regulations coming out,
Yeah.
we feel now we have a much larger playground to play
Hmm.
with the regulated environment.
Hmm.
Investor confidence will go up. A
Hmm.
lot of developers who were not considering us, that doubting our capabilities, that no, I don't think so. These guys can acquire a 500 crore property from me, so I don't want to talk to you
Hmm.
also. Might now start talking and start exploring partnerships, etc. So we
Okay.
would consider raising funds sooner or later. We've been thinking about it, but the idea is that that will allow us to scale at much faster pace.
Hmm.
If today I have a 50% market share, I want to increase that to 75% market share.
Okay.
We don't want to be 100%. We are very clear.
Yeah.
But 75, 80, 90, we'll keep pushing.
Why don't you want to be 100%?
It's competition is always
It's
healthy. It
always
keeps you on
healthy.
your toes,
Exactly.
right?
Yeah.
For you to do better,
Yeah.
chase on deals together,
Yeah.
etc.
True. Yeah.
So we definitely don't, and I don't think so. An industry can be made by
Yeah,
one
that's
guy.
true.
You
That's
need
true.
players to come
Yeah.
together to do. So
Yeah.
we know there'll be 100 other players who will come,
Yeah.
especially with regulations.
Yeah.
As such, but we want to see if we have the lion's share of that. That every developer on the supply side considers as a first choice,
Hmm.
and every investor says that we can do the best deal and get the best deal for them on that. So it's matching both the windows is what our platform does,
Yeah.
right? So if we can
Yeah.
do it very proactively and at the breakneck speed, again,
Yeah.
thanks to the technology we built,
Yeah.
which will allow me to do it. So we've been anticipating SEBI's regulations coming because we've been talking to them for almost a year now. We prepped our platform already to be SEBI equipped.
Okay.
So
Okay.
when
Good.
regulations come, we
Yeah.
have to see if there's something more they need.
Yeah.
Otherwise, it'll take me not more than 2, 3 weeks to be a completely compliant platform, because we've seen other platforms
Yeah.
where all SEBI has regulated with newer regulations, REIT
Okay.
platforms, etc.
Okay.
And we've equipped our platform already with those things.
Okay.
So we know
That's
we
great.
have a 2 year head over any player in the market,
Okay.
which itself is one of the biggest advancements in terms of for you to scale
Yeah.
at the end of
Yeah.
the day.
So what are the challenges that you have? Your most your biggest challenges?
I mean, life of an entrepreneur, it's always a day of challenge, right? But that's exciting. That's what keeps you
Yeah.
up to keep solving for these
Yeah.
challenges on a regular basis. So yeah, smaller things here and there. Like sometimes it's about you wanting to buy a particular property at a price, but the sellers don't want to sell at a price. We know our investors won't buy, so we feel bad that we can't buy this property because, like I said, my investors' mindset is capital wealth creation and
Yeah.
not preservation,
Yeah.
and the seller wants a wealth preservation guy and not a wealth creation guy, right?
Yeah.
So, we somehow have been tagged in the market as bargain hunters,
Okay.
where or tough negotiators.
Okay.
So probably are not the first choice to a lot of guys because they
Okay.
feel that we might not give the right value they might want for
Yeah.
the property.
Yeah.
And my job is to get the best deal for my investor,
Yeah.
right? So I'm not ashamed of that if somebody wants to
Yeah.
tag me.
Yeah.
I'm proud of the fact that my team does a great job of negotiating a good deal to get the best
Yeah.
deal for the investor. So
Yeah.
challenges are more on acquisitions in general.
Okay.
Second is the whole process around the whole legal things in India. I hope a lot of the legal
Hmm.
things could be digitized, which makes
Yeah.
life so easy.
Yeah.
Otherwise, it's such a time-consuming aspect
True.
that it becomes such a nightmare for us to operate
Yeah.
at the end of the day, right? So these
Yeah.
are a few
Yeah.
smaller things, these are solvable things, just that
Yeah.
as a technology platform, you want technology to solve for everything, but these are
Yeah.
things you
You
can't solve by
can't solve
technology,
for
right? So
exactly.
we
Yeah.
hope government starts taking those
Yeah.
initiatives to
Yeah.
solve those through to technologies,
Absolutely.
which allows us to scale.
Yeah. Yeah. Anyway, so it's been a very nice conversation. Thank
Yeah,
you. I've learned
no
a lot.
problem.
Any closing thoughts you would like to? Uh,
No, so I think we are at the epitome, especially with regulations around, we're at the epitome where this market will do well. We were unfortunately bowed down by only foreign funds to own the commercial real estate market. I think with regulations, we'll have a lot of Indian capital, which will also give a run for the money to those foreign funds also. While I'm sure we are 1% to the size what they are, but dream big. What's
yeah,
stopping
of
you
course.
from bidding for same properties and
Yeah.
winning those bids
Yeah.
and owning a piece of that, on your behalf of your investors? So that's something which is very exciting to us.
Yeah.
I was talking about healthcare. So we
Mm.
feel if we could, while financial angle is one angle, but with more healthcare, if we are enablers of that, we feel
Mm.
we've created a massive impact as well.
Yeah.
Indirectly, whatever form and manner, we feel that might be a great thing. That, in fact, that's something which I'm very, very
Yeah.
and fondly excited, where I'm putting a lot of my time and effort meeting everybody
Okay.
and seeing if we could
Yeah.
do. So that's
Could
what
do
it
that.
is.
Okay. Thank you so much,
All right.
Sudarshan. Thanks for coming
No
over.
problem.
Yeah.
Pleasure. Thank you.
Hi, I'm Sapna. Hope you enjoyed the session. In this series, we'll be talking about three broad areas: real estate as an investment, prop tech, and business building in general. We also run an annual event called Propathon, and our sessions from Propathon this year are also part of this podcast series. If you enjoyed the session, please do like, share, and subscribe. If you have any comments, anything you would like to hear about, please do leave it in the comment box below.